Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Valerie Teitel. We're an hour away from the opening trade. Here's what you need to know. Conflict erupting in the Middle East as Israel says Iran has launched over 100 drones in retaliation for a wave of airstrikes against Tehran's nuclear program and ballistic missile sites. Oil prices surging on the back of it, fears of a wider war in a region that accounts for a third of global crude production, Brent, rising the most in over 3 years. And investigators have started combing the wreckage of Air India flight AI-171 as they seek to determine what caused the Boeing Dreamliner to crash shortly after takeoff, killing all but one of the 242 people aboard. It marks the deadliest aviation accident in more than a decade. Valerie.
Let's check in on these markets. We have global equity markets in the red, both Eurostoxx 50 futures and S&P futures down around 1.5%. Brent crude surging around 7%. It is off those highs. It was around 11% higher at the highs this morning. The Bloomberg Dollar Spot Index is reacting positively to this risk-off move. The countdown to the opening trade starts right now.
Friday morning, Israel has attacked Iran. We now wait to see what happens next. But one of the more significant tail risks for the market is now crystallizing. What happens next is very hard to determine. How markets react is very hard to determine. We don't know a lot at this point, and we are waiting to find out more. So let's get an update on what we do know and what we can expect. Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia, joins us now. Stuart, good morning. Israel and Iran have been exchanging fire over the last few months. Is this different? And if so, why?
Yeah, good morning, Guy. It is absolutely unprecedented in the sense that this is the first time that Israel's gone after Iran's nuclear facilities with airstrikes. So it's done it with cyber before, but this is airstrikes and it's on a whole other level. So we know about 200 planes flew all that distance. They had something like 100 targets. Now, that included nuclear sites, that included atomic scientists, that included military leaders of various descriptions. And there is some suggestion that it may have targeted some of the refinery facilities, although it would appear that they're undamaged. So really what we're watching now is the retaliation. As you said, there are 100 drones that Israel has said is coming back towards them from Iran. Two things to be said about that. They tend to move very slowly. It will probably be some hours before they make it to Israel. I think it is also fair to say that it is unlikely to be the end of Iran's retaliation for these attacks. And then the other thing that we'll be watching very closely is whether Israel goes again, because the early indications are that there's no radiation leaks at the main uranium processing facility. And that in turn would suggest that the containment has not been breached. Now, whether that's enough for Israel or not remains to be seen. But that's really what we're keeping an eye on in the days ahead.
Stuart, thank you very much indeed. Stuart Livingston-Wallace updating us on what we know. Let's talk about what we don't know and what could ultimately come to pass here. Kriti, we're seeing a fairly significant move in oil. Not that significant. You could argue that this is a move that could take us much, much higher. You're starting to see some of that being priced in options. But the impact of an oil move takes a while also to work its way through the economy. But at the moment, that is the obvious place that we are looking for a reaction to this story.
It's the timing is everything here, because this also comes ahead of the expected Iran nuclear discussions in Oman between the United States and Iran. We'll see if those are still even on the table or even up for discussion, especially as we know some of the top officials within Iran, including the head of the Revolutionary Guard, according to state TV, was killed as well. But to your point, this is an oil story first and foremost. And so far, the oil infrastructure has not been hit, according to our reports. It's largely been military infrastructure. But for a global audience, Iran has been increasing the oil production in the last couple of years, the last 5 years or so especially. So the global dependence on Iran has also increased.
Yeah, I think they're around 5% of the official global supply of oil. But I think the question for the oil market is looking forward. You know, what kind of disruption could the oil market face? Let's say if Iran does do some a blockade of the Strait of Hormuz. We know a lot of the Middle Eastern oil goes through that. That could really cause a squeeze higher in oil prices. JP Morgan even wrote in a note yesterday that in the worst case scenario, we could see $130 oil off the back of these escalations.
So let's just think about this and kind of work out what could happen next. We have seen this drone attack being launched by Iran in response. There is a significant asymmetry here. Israel clearly can control its airspace. It has the ability to do so. It has the potential, and we've seen this in the past, to defeat these drone attacks. Iran clearly can't control its airspace, and therefore is open to other attacks that could come from Israel. So therefore you look at what Israel is going to do next, and you look at what Iran is going to do next, and it feels very asymmetric. At the moment, Israel is attacking Iran. But is Iran just going to attack Israel? To Val's point about what happens in the Straits of Hormuz, that is one possible outlet and avenue for it to reciprocate. But there are plenty of others. You could see terrorist attacks. You could see attacks being done by proxies on in other parts of the world. This is where it becomes challenging at this point. At the moment, we are looking at this as a contained attack between Israel and Iran. But the potential for it to spill out and cause damage elsewhere, and you look at the Iranian conflict, potentially impacting the Ukrainian conflict, there are other areas, other avenues. And I think that's the challenge that the market has going into this weekend, looking at where this could show up next and what it's going to look like.
And who's going to be the voices calm in this scenario? You know, Trump already tried to de-escalate this scenario. He tried to pull back Netanyahu from making this attack, and he was unsuccessful. So who is going to be the voice of reason to de-escalate this in the face of Netanyahu and his war hawk actions?
Yeah, and that is a political standpoint of this as well. Then we have to factor in what the United States does as well, and that's perhaps where the market reaction extends beyond the oil story as well. You are seeing futures sell off on both sides of the Atlantic, and there is a question here, despite, by the way, this comes 24 hours after the U.S. evacuating their Baghdad embassy as well, on the fears of these geopolitical tensions, which have now come to fruition. Marco Rubio of the State Department making it very clear that they do not support Israel in these attacks, but if Iran retaliates on any sort of U.S. personnel or military infrastructure, that would increase. Does that tone shift when it comes to the U.S. defense of Israel? And perhaps that's the fear here when it comes to the broader market story.
We don't know where this goes next. But if you are a shipping company and you're running ships through the Red Sea at the moment, do you reconsider that? That is certainly something that you're going to be looking at. Think about how this is going to impact inflation in the United States. Anna Wong, the team, Tom Orlick, have run some scenarios on what $100 a barrel looks like, $130 a barrel looks like in terms of the inflationary impact. Do I need to reprice the Fed off this in terms of the way that I think about it? I don't know. That's the problem at this stage. We don't know where this goes next, and we don't know how it escalates.
And I think most importantly for the markets, if you're a big dollar bear, do you reevaluate that position? We're seeing the U.S. dollar react strongly on the back of this. It is reacting like a safe haven. It's rising alongside the equity market falling, which we know it did not do in the month of April when S&P 500 went down near 20%. So, again, I think that is a big revaluation for the market. We know the market is very short dollars at the moment. We could be headed toward a very big short squeeze in the U.S. dollar.
And at the same time, you mentioned that haven story. We talked about the bond market. We are now looking at a 432 on the U.S. 10-year as well. That is an asset that is traded between a 420, 460 range as well. Now nearing the low end of that. So if we're talking about where the consensus lies, where a lot of those funds lie, the bond market is one to keep an eye on as well. So as we keep one eye, of course, on the oil story and the broader markets conversation out of the Middle East and the region there, we should also give you an update on the other major story that we're following. It has been reported that one of the black boxes located at the rear of the crashed Air India plane in Ahmedabad has been recovered. The London-bound Boeing 787 Dreamliner crashed shortly after takeoff, killing all but one of the 242 people on board. UK and U.S. officials are assisting the investigation into what happened. Our Asia aviation and transport reporter, Danny Lee, joins us this morning out of Bangkok. Danny, we know you've been covering the story very closely. Walk us through the latest about the possible causes of the crash.
Yeah, we still don't have a lot of information to go on, and particularly as we've reported, there has been one black box that has been found so far at the crash site. We don't know yet whether it's the cockpit voice recorder or the flight data recorder, and also what condition both these black boxes are in. And these will really hold the clues in the final minutes and seconds before this plane went down, only, 30 seconds or so after takeoff. And so, these are the kind of key pieces of evidence that will really help put together for the investigators fairly quickly what went on, because this Boeing 787 aircraft is such a widely used, popular aircraft, very advanced, and for it to have its first major loss of an airframe, it's pretty stunning for Boeing. And also, we saw that in the market reaction yesterday. But as we move on, the crash site itself has moved from a search and rescue phase to a recovery phase, and particularly as we still don't have a handle on just how many people have died beyond those who are on board the plane, only one survivor as well. And part of the other developments we have seen overnight is that Boeing CEO Kelly Ottberg and his commercial chief Stephanie Pope, they both will not be going to the Paris Air Show next week, which is one of the big industry annual events, particularly at a time when they were expecting to sell a lot of planes, produce billions of dollars worth of sales. That's now not going to happen. And for them, it's a focus on getting through this latest crisis. As yet, we still don't know what has happened.
All right, Bloomberg's Asia aviation transport reporter Danny Lee following that story for us. We certainly appreciate the update this morning. Guy.
OK, 49 minutes to go until the equity market open here in Europe. We're going to stay across everything that is happening in terms of the developments surrounding the Middle East and what the impacts of the surging oil price is going to have on assets beyond the commodity market. If you want to join the conversation this morning, you have any thoughts on how this story is going to evolve from here, please get in touch. IB Plus, BBTV Go is the function on your Bloomberg terminal. As I say, 49 minutes to go until the market opened this morning. There is lots to look at. We will continue the conversation next. This is Bloomberg. 45 minutes of the equity open here in Europe this Friday morning. We are factoring in a significantly higher oil price. And you can see that reflected in European futures this morning. Look at what is happening across the continent. Markets are lower. Equities generally are down. London looks like it is going to potentially see a more muted response. The reason for that, oil majors, BP, Shell, etc., will be factored into the thinking of the market this morning, and that is what you are likely to see at the open this morning. Other areas to watch, of course, will be what is happening with the defence space. But let's update you on what we know at this point. Israel says Iran has launched over 100 drones in the last few hours in retaliation to that unprecedented attack by Israel on the Iranian nuclear sites. Now, those low-flying drones can take up to 5 hours to travel the distance between Iran and Israel. So we're going to watch for those attacks a little bit later and the impact that they have. Prime Minister Benjamin Netanyahu says Israel launched a wave of airstrikes against Iran's nuclear scientists and its military generals. The Israeli army says it was left with no choice but to act against Tehran. Iran is warning now that Israel and the United States will face what could be being described as a harsh blow. It says no harm significantly at this point has been done, Kriti, to its oil refineries.
In the meantime, Iranian state media reporting that the head of the Islamic Revolutionary Guard, Hossein Salami, as well as Armed Forces Chief of Staff, were both killed in the Israeli strikes. Now, Iran is also saying that 6 Iranian nuclear scientists were also killed in the attacks. Benjamin Netanyahu vowing to continue attacks for as many days as it takes to remove what he described as the Iranian threat. Of course, massive fallout in the oil markets from the get-go, but as well in the broader markets. Let's get an update from Valerie Teitel. Val, walk us through it.
Global equity markets are on a back foot from the U.S. to Europe to over in Asia. S&P futures down 1.4%. Not that bad, Kriti. It would be its worst session in just under 3 weeks, to put that in perspective. But one thing that is notable is with these equity markets declining, we are seeing a safe haven bid into the U.S. dollar. The Bloomberg Dollar Spot Index only earlier this morning hit a fresh 2-year low, but we bounced very strongly from that. We're now 0.3% stronger in the U.S. dollar. I do want to have a check on the Israeli shekel. That is an EM currency that's benefited a lot from the dollar weakness of late. It's erasing a lot of those year-to-date gains. The Israeli shekel is trading 2% weaker versus the U.S. dollar. We'll keep our eye on that as things develop. Lastly, I want to end on gold. Another safe haven bid as gold approaches a record high. The record high for gold spot is 3,500. So we're trading still under that, but again, up 1% today on this risk-off move.
Val, thanks very much indeed. Alex Yakov, European head of G10 FX strategy at BNP Paribas Markets 360, joins us around the table. Good morning.
Good morning.
A lot to factor into our thinking this morning, but let's start off with the dollar. Valerie, just bringing up what is happening and the bid that we're seeing back into the buck. Is the market positioned for the US dollar to resume its status as a safe haven? How out of position could traders be?
Risk off, higher oil prices, exactly as Val was pointing out, means euro dollar lower. I think what's important is that European current account sensitivity to oil prices is particularly high, so this presents a downside risk to what has otherwise been a bullish euro dollar call from BNP Paribas. I think that what's notable is, in spite of euro-dollar falling today, it's still holding up okay above 115. Yeah. And if we look at, for example, yesterday's price action, which also saw risk off, the dollar was actually lower. And the more days we get like that, either where the dollar isn't rallying a lot on risk off or the dollar is actually lower, the more concerned global investors will be about holding the dollar.
How is there a potential for a squeeze, though, in the short term? The market feels like it's short dollars. And I'm wondering whether or not the paradigm could change and the perception could change if suddenly you see the dollar spiking sharply higher as some of those get unwound.
What we see at our proprietary positioning metrics at BNP Paribas is that the market is short dollars, but it's not max short dollars.
Right.
So the positioning isn't that heavy. And so, of course, there is squeeze risk, especially if the geopolitical risk-off continues. But ultimately, we'd be inclined to say euro-dollar over the medium term can continue to head higher. A key input into this is our view on global flows. We think that there is a structural rotation out of the dollar currently underway by global investors, and that's particularly so the case for European investors.
Well, that structural rotation has also been creating, to Guy's point, a very big consensus trade in maybe not shorting the dollar, but certainly not being long dollar either, and creating that neutral position. But because it's a consensus trade, there's a fleeting voice that is suggesting that this has gone too far. Is this the catalyst to unwind that trade? Is this enough to get us there?
I think it's a really good point, Kriti. The fact that it's consensus matters less this time than, for example, for a central bank meeting. So if a central bank is fully priced, then it's unlikely that the market moves on whatever decision they ultimately go for. But a flow, which is what we think is currently driving FX, is very difficult for the market to price in ahead of time. And so we think that European investors increasing hedge ratios, and we have started to see this show up in the data, is a flow that is very difficult to be priced ahead of time and something that will drive euro-dollar higher, even if it's already, as you rightly point out, a consensus story.
You mentioned the central bank read-through there as well. How persistently high do oil prices need to be for a bond market to more substantially react to a potentially more hawkish tilt from Jay Powell?
I think the Fed have effectively communicated that they're going to be on hold for the summer. And so what you saw is, even though we had softer CPI, the market reaction was quite muted. I think we can think of the oil price move in a similar way, where the market's going to wait and see how the summer plays out before it starts to think more actively about Fed pricing. In terms of FX, what we're saying is front-end rate differentials matter less for currencies at the time, or at a time when flow is driving FX. So, of course, what happens to the Fed is key for the dollar, but less so than in other paradigms. 2017 was a good example. Euro was able to go from 105 to 125 in spite of 2-year rate differentials moving 100 basis points in favor of the dollar. And that's because it was driven by flows.
Okay, so interest rate differentials will have less of an impact this time around. You're more focused on flows. Will there be anything, though, that would change that conclusion?
I think one thing we're focused on is how European growth holds up. If European growth were to deteriorate more rapidly than we expect, then that would challenge the repatriation story. But that's not our base case. Our base case is that European growth holds up fine. And in particular, into the NATO summit, I think that European fiscal can come back as a theme. And that's something that means steeper curves, higher, better growth prospects, and a stronger euro.
You know, I know EM isn't necessarily your focus, but EM currencies have really benefited from this dollar weakness. Do you think that theme could turn around if we get a sustained risk-off move with the dollar higher?
No. If we get a sustained risk-off, either driven by geopolitics or just an equity market sell-off in the U.S., it's very difficult for carry to perform. But in the context of easing trade tensions, still relatively contained volatility, carry tends to do okay. The problem is that in EM, there isn't as much carry on offer, at least in currency space, as there was in prior years. So the Brazilian real is one currency that stands out where there is still decent carry on offer. That's a currency we like. We also like HUF. I think the key point with carry is you don't want to be long dollar carry, because being long dollar carry goes against the flow story. And although some in the market like it, we don't.
What currency would you use to fund these positions? Yen?
I think an attractive funder is just the dollar. You can be short. You can be short dollar Brazil, For example, that's something that makes sense in the current environment.
Is there a point kind of where we get to where we find ourselves with a scenario where US inflation is so strong that you have to think about you have to factor the interest rate differentials back in? You get to the point where oil stays high, you've got the Red Sea closures, you've got tariffs looking like they are going to start to have an impact. They haven't yet, but they're going to fall through fairly quickly at some point. Do we get to the point where those interest rate differentials start to come back? That the European economy is getting dinged up so much by the oil story, by the energy story, by the tariff story. The fiscal story is going to be there, but is it going to be strong enough? And how much further can it go? How much? You talk about 125. Is that another line in the sand that we should be looking for here? Kind of I'm trying to get my arms around the current scenario and when other scenarios start to bleed in. And I'm just wondering about that inflation story and how that factors ultimately into our thinking.
I think the point at which we'd start to be concerned in terms of FX becoming more correlated to rate differentials again is the point at which the Fed gets priced for hikes, or at least cuts get fully priced out. I think that's when the market will start to more actively trade rates.
It's hard to do that if the next Fed chair is going to be uber dovish, like Paul Jones said yesterday.
So we don't know who the next Fed chair is going to be. We also don't know when the inflation story is going to show up, if at all, and when that happens. Do companies continue to suck it up? But it does seem as if Fed pricing, off the story that we're talking about this morning, is quite significant. How do you draw a line between what is happening with the Iranian story to the oil price to what is happening? University of Michigan data is going to be out a little bit later on. There's normally quite a clear line between higher gas prices and the perception of inflation. The Fed's got to pay attention to that, right?
Yeah, no, I think so, especially because they are very worried about inflation expectations somehow becoming de-anchored because of tariffs. Obviously, if you have oil price rising, as well as that could cause more fears of inflation expectations moving a bit higher. Those longer-term inflation expectations, like in that UMISH data point, the 5-year inflation expectation. So, something to definitely keep our eye on. But, oil is at $75 a barrel right now? Yeah. So we're far away from that scenario.
Yeah, that has been, yes, it's increasing today because of the attacks in the Middle East, but it was already on an upswing all week long. And a lot of that was coming from the trade uncertainty, but it wasn't reflected in the commodity currencies. You were just now seeing a dollar story. Why not? Why that delay?
I think it's coming. As you say, there's a lot of things we don't know yet, but there's some things we do know, which is that oil prices tend to feed through positively to CAD and Norway. Out of those two, we think NOK can do particularly well. In general, European currencies benefit from the flow story. NOK has the additional growth angle and, of course, a positive flow story as well. So we think that if oil prices continue to stay bid, then NOK is a good place to be allocated.
Are we in a more inflationary environment? Are we underpricing it still? The inflation. This week has been a story of.
Don't forget, we just had CPI and PPI, okay?
I know. This is my point, is that this week has been about the inflation not showing up yet. Yeah. But are we in a more inflationary environment?
I think Val's point is a key one, which is that the market has been expecting tariffs to feed through in a positive way to U.S. inflation. And since then, we've seen CPI come off, PPI be a bit softer, and activity data not really deteriorate. So tariffs haven't really fed through to prices. The market will need to see that before it more actively trades a higher inflation regime.
We might not get that till July.
Alex Chekhov, Europe head of G10 FX strategy at BNP Paribas Markets 360, walking us through the FX reaction to the reaction we're seeing really out of the Middle East. In the meantime, we are seeing oil markets still very much on a tear, an 8% increase in both Brent and NYMEX. We're going to continue our coverage shortly. Stick with us. This is Bloomberg. "30 minutes away from the start of the opening trade across Europe, futures decidedly lower on both sides of the Atlantic. Just take a look at this. Eurostoxx 50 futures down almost 2%, I think 1.7%, and selling off since we start this program. The FTSE 100, however, is a little bit selling off a little bit less, only down 0.5%. Perhaps an expectation that the oil price jump there is going to have a read through into some of the majors listed on the FTSE 100. But then again, go right back to the continent. The CAC 40 following in suit, down about 1.5%. Val.
Yeah, let's take a look at how European bonds are shaping up at the open. We know that oil price rises tend to benefit European fixed income more than U.S. Treasuries. We're seeing that theme this morning with that German 10-year yield down around near 5 basis points. So they're outperforming the bid into fixed income. We have U.S. 10-year yields down a bit less.
Let's talk about why this is all happening and the market reaction that we are seeing. Israel says Iran has launched over 100 drones in the last few hours. This, of course, in retaliation to the unprecedented attack by Israel on Iranian nuclear sites and also senior leadership. We're also getting more reaction now from some of the Arab states. The United Arab Emirates now condemning the quotes, the attack in quote the strongest terms. We have obviously seen the Saudis already coming out with a comment as well. We're going to wait and see exactly how the rest of the Arab world deals with this. Also, we're going to wait and watch and see how China and Russia respond to this as well. Ona Ant, Bloomberg's managing editor for the Middle East and North Africa, joining us now. Ona, we have seen the Israeli attacks. We don't know yet whether or not this is just a first, second wave, whether there are further attacks coming. We have seen the Iranian response. Can you give us a sense of what people are talking about in the region about how this now moves forward, how this conflict escalates or de-escalates? What is the latest thinking?
Well, that is really the key question, where it goes from here. And there is hardly any sign that there is going to be an immediate de-escalation. If anything, the comments from Israeli leadership and just the nature of how this conflict has unfolded in the last couple of years, I think it's fair to expect that this was just the opening act. It looks like Israel did focus on some key Iranian officials and military sites in its opening strikes overnight in Tehran and elsewhere across Iran. And from now on, it's natural to expect that the focus of these attacks will move towards the nuclear sites, some of which have been hit in strikes earlier this morning, but some of the major nuclear sites in Iran, such as the one in Fordo and Bushehr, have not been hit, and it only makes it more natural to expect that the rest of the operations will focus on nuclear sites, whether it happens tonight or later over the next couple of days or weeks. We don't know, obviously, but that is what is to be expected from this conflict at this point.
Ona Ant, Bloomberg's managing editor for the Middle East and North Africa, joining us this morning with an update on how it's being received in the region. We thank you so much. In the meantime, let's go right back to the markets. Oil, of course, surging on the news of those attacks. But where do we go from here? Already seeing an 11% move over the past 3 days, but 8% on an intraday basis when it comes to Brent crude. I want to bring in Amina Bakr, head of Middle East Energy and OPEC Plus Insights over at Kepler. Amina, pleasure to have you on the program. Thank you so much for joining us. Walk us through the risks here. Walk us through the case, perhaps, for something like $100 oil. What do we need to see to get to that level?
There are lots of risks here. I mean, we're in a very, very volatile situation. This is the worst attack on Iran since the 1980s war, when you had the conflict between Iran and Iraq. So the situation is very delicate, and there are many risks involved. Primarily, I mean, the first thing that comes to mind is that, one, we're going to get some kind of obstruction of exports from Iran. But the second thing, and this is more of a kind of alarming situation, if there is any stoppage at the Strait of Hormuz, and as you're aware, that 20% of the world's supplies flow through the Strait of Hormuz. So any blockage there, that's going to possibly bring oil prices to the 3-digit zone.
So, Amina, talk to us a little bit then about where you start to see the biggest pressure point in terms of some of the OPEC output as well. You talked about the Red Sea, you talked about the Strait of Hormuz as well, but those are largely transportation costs. From an actual production standpoint, where's the touch point?
Sure. No, from an actual production point, I mean, the group has already started to, I'm talking about the 8 members of the OPEC Plus group. They had these voluntary cuts, they started unwinding some of these cuts, and we're getting the increments through the summer. There is some speculation out there that the group was kind of factoring this attack in. This is absolutely baseless. The calculations were basically around seasonal demand in the summer, and that's why they sped up these increments into the market and had nothing to do with the geopolitical situation. However, I mean, right now, there is no control over the geopolitical premium that we're seeing on the price. OPEC can't control that. So the best thing is just to wait and see what happens. It's too early to say. And we do not have a physical disruption on supply. So there's no reason for the group to step in and say, okay, we're going to use some of our spare capacity to fill in the gap. There's no gap yet.
Amina, good morning. It's Guy. How much of the global spare capacity that exists in the oil market sits behind the Straits of Hormuz?
Well, we have within OPEC alone around 6 million barrels. I would say the other members would have maybe 1 million barrels. So in total, around 7 million barrels of spare capacity. That's not to say that, you know, that is it's a good cushion. It keeps markets kind of at a comfortable level. But markets now are reacting on sentiment and not just looking at where the fundamentals are. So that's not to say that prices are going to, you know, not react and move up.
But how much of that spare capacity sits in Saudi Arabia, Kuwait, the UAE, i.e. if there was a problem with the Straits of Hormuz? We talk about the idea that there's plenty of spare capacity out there, and sure there is, but a significant portion of it could be taken out of the market very quickly.
Absolutely. I mean, you're talking about maybe 6 million barrels that sits within this region. So that is a significant amount of spare capacity. And we've seen attacks on facilities in this region before. If you remember, in 2019, 50% of Aramco's capacity got wiped out in just a matter of a few minutes. So there is a reason why there are lots of statements coming out from the Gulf states condemning what happened. There's an effort to de-escalate the tension here. It's not in anyone's interest to have this war prolong or these attacks go on for a long period of time.
Amina, I want to ask you about maybe your worst case scenario price target for oil. We had a note out from JP Morgan yesterday saying the worst case scenario could see Brent trade close to $130 a barrel. What's your call?
Yeah, possibly. I mean, 130, 150. What's not to take prices there if we do see a major obstruction in Hormuz or an attack in the region? But also dynamics have changed. I mean, the Gulf states and Saudi Arabia have a relationship with Iran now, so hopefully it doesn't come to that.
All right, so you're talking about 130, 150 being reasonable for a worst case scenario. But what do you make of today's move? You know, at the worst case or at the worst time today, Brent crude was up some 13%. We've cut that nearly in half. Do you think that today's move is warranted given this escalation?
I think that today's move is the biggest move that we've seen from geopolitical factors across the region. If you look at previous attacks, I'm talking about even during October 7th, we haven't seen crude react so much. The market has been brushing off the geopolitical risk for a region. So this is the biggest increase we've seen to the geopolitical premium factor on prices in just recent history.
But Amina, there is no geopolitical premium from what I'm seeing right now. In the sheer Brent over NYMEX difference, we're looking at somewhere between $1 and some change. Walk us through a little bit where that geopolitical premium lies when in previous iterations of, say, drone attacks on Aramco production fields or trade tensions, you've seen a geopolitical premium of anywhere from $4 to $6. Where is that in this price action?
I would say is because, I mean, this is a reaction mainly based on sentiment. And if we get a supply disruption, that's a different story. This is just on the expectation that, you know, this the strikes will escalate, that war will expand, that Iran will retaliate in some way. These are all just a kind of preemptive reaction and not based on a supply outage. When you had the attack on Aramco, I mean, that's a completely different story. As I mentioned, you had 50% of capacity wiped out. This is a different situation. So the price influx that we're seeing today, again, is based on a situation where you don't have changes to fundamentals per se, but just an expectation that things could get worse.
I mean, who does this affect the most? Which economies are most exposed to this move? Who are the biggest buyers of the crude that is coming out of Iran and potentially out of this region? So I'm just trying to think about what the inflationary effect is going to look like and where it shows up. What would you say to us on that front?
Well, you already saw, Guy, yesterday, President Trump himself complained that oil prices were too high and he wasn't happy. And he even addressed Chris Wright and told him that he needs to do something to bring prices down. So President Trump is somebody who isn't really happy with the way prices are moving. I mean, of course, the biggest buyer of Iranian crude is China. It'll be more difficult for them to secure barrels out of Iran. I mean, it's just the difficulty. I'm not saying that Iran can't bypass sanctions. They've been very good at bypassing sanctions, but it's just the difficulty right now that they might face in transporting that crude to China. But overall, I would say, I mean, the demand picture for 2025 wasn't a very rosy one. So if you have a very volatile situation or a big spike in prices, that doesn't do well in terms of encouraging oil demand globally.
Amina, you mentioned Donald Trump. That has been a key piece of the question that we've been asking this morning, in that if we are waiting for this kind of further retaliation, further attacks from Israel and Iran, at what point does the United States speak up a little bit louder? And we know there have been these warnings earlier in the week. I'm curious what the actual probability of U.S. involvement in this conflict is. Do you have any insight on that?
Well, we understand that the U.S. did give the green light to Israel to go ahead with this attack. Doesn't mean that the U.S. is directly involved, but they were absolutely aware that this was happening. This was part of the plan, and they were given the kind of green light to do it. U.S. involvement, I personally don't think that this would happen. And already, I mean, I saw a couple of news headlines suggesting that Trump is going to ask Israel to back down in hopes that maybe on Sunday some kind of negotiation or agreement would be met. But at the same time, I mean, we're hearing from Iranian officials that they're not going to be attending the talks on Sunday. So it's a difficult situation, and unfortunately, I just see escalation at this point. I don't see it stopping.
Amina, when it comes to those U.S.-Iran talks that you were mentioning that are expected to take place over the weekend, you know, you talked there earlier about Iran nearly sanction-proofing its economy. What's your read on that? How sanction-proof is Iran?
They've developed quite a sophisticated network over the years that would transport their oil. And we've been seeing their exports kind of hover between 1.6, 1.7 million barrels a day. And their primary, buyer here is China. And the Chinese refinery still do have appetite for these sanctions discounted barrels. We do get fluctuations from time to time, but Iran has proved its resilience in bypassing sanctions. That's not to say that if the U.S. decides to press even heavier sanctions, that they will face obstacles, and perhaps we would see some of these volumes come off more. But we're at a point here. We're not talking about sanctions anymore. We're at a point of conflict. It's much bigger and more serious. But for the time being, just from our reporting on the ground and what we've heard from the Iranian national oil companies, is that there has been no damage to oil facilities. So technically, their production is still intact for now.
Mina, thank you very much indeed for updating us. We greatly appreciate it on what is happening in the oil market. Amina Bakr, head of Middle East Energy and OPEC at Kepler. We're going to be back in a few more minutes. I just want to draw everybody's attention to the fact that there is a T-Live running on the Bloomberg terminal. The latest we're seeing on that is that Israel is already starting to intercept drones in Jordanian and Syrian airspace. That according to Can News. We'll be back with the latest in just a moment. 15 minutes to the market open. This is Bloomberg. Friday morning, 11 minutes to go until the opening trade. Let's talk about the latest news that we have. We are now getting news that early warning sirens are being heard in Jordan. We understand that the Israelis are intercepting some of the Iranian drones that have been fired, and we will continue to watch what happens there. This is about control of airspace. It is clear that the Iranians can't control their airspace. The Israelis are obviously going to mount a significant defence against these drones. How successful they turn out to be could have a really big impact on what happens next. The crude market, though, monitoring all this very, very carefully. We've seen a significant move over the last 3 days, to be honest, and we're watching what Iranian crude is going to do next in terms of where those barrels go, if at all, and that's what Kriti's got her eye firmly trained upon.
I do, Guy. I think it's a really interesting one because we have to put this in the context of what that global output actually looks like. So I did a little bit of number crunching. This is Bloomberg data in terms of some of the output provided on the markets. Remember, it's only the accounted for barrels. We don't know how much is unaccounted for. But I think this is some good perspective for our global audience here. Let me walk you through this chart. This blue line up here is how much Saudi Arabian barrels do eventually hit the market. So you can see it's been fairly steady going back between 2010 to about 2019. The COVID kind of crisis did, of course, change that. You've seen a series of output increases, and it has been fairly stable until recently. That is the Saudi story. And, of course, they are the largest oil producer within the OPEC Plus complex. So that's the one to keep in mind. The second, country I really want to point an eye on is this yellow line here, and that's the Iraqi oil output. The white signifies Iran. And you can see this is really crucial because, of course, we know that we got an early indication that this conflict may actually come to a fore when we started to see the Iraqi embassy for the United States ultimately get evacuated. I think that's a really crucial piece because Iraq, of course, is also an oil-producing nation, several barrels of which go to Western Europe and the United States as well. But the fact that you are starting to see Iranian oil output increase, by the way, in the last 5 years, so really since that COVID slump, they have been on an upswing. A lot of that has to do with some of the softness around sanctions there. Some of that also has to do with Iranian nuclear negotiations as well. We are now at levels near Iraqi levels of production, nowhere near Saudi, but getting close to Iraqi levels of production. Guy, I think that really highlights just how important Iranian crude is to this global oil market.
Absolutely. The Chinese will certainly be paying a great deal of attention to what is happening here. Let's carry on the conversation and look at the market response that we've seen thus far. Joining us now for his assessment, our Markets Live executive editor, Mark Cudmore. Mark, I've been reading your kind of evolving thoughts throughout the morning. Talk us through kind of where your thinking is right now. Unsurprisingly, a big move in crude. Is it that big? What are the ripple effects into other assets as well that we should be watching for?
So the oil move has already halved from the highs this morning. We were up 12 or 13% in Brent crude earlier. We're only up about 6.5% when I looked only about a minute ago, which shows that we're kind of really pairing the initial reaction quite rapidly this time. But it's interesting, the whole curve is moving a bit, which shows that people are expecting some kind of sustained disruption, even if maybe not as dramatic as a few hours ago. Oil prices much higher is ultimately very good for the US. And I think in context, the initial reaction today was to sell the dollar again. That is the backdrop theme of this year, and shows that will be the macro theme for the very long term. But I think that all those people who sold in the initial reaction are going to be caught offside because higher oil prices is good for the US. It is a positive terms of trade shock. It's good for US businesses on net because it's the world's largest oil producer. So therefore, I expect a bit of a dollar short squeeze. That does not change the longer term picture that we're in a dollar downtrend, but we could get quite a painful short squeeze in the dollar in the short term. The other probably really interesting takeaway is that US stock for one of the weakest links. Asia is a much bigger, is a big energy importer. You'd expect Asian stocks to suffer more in this, but most Asian stocks traded okay. So the fact that the weak link was actually US stocks, very surprisingly, which shouldn't be directly affected by this, should have a more of a positive impact from higher oil prices, shows where the weak hands were. I think a lot of people piled into this market in the last week or so expecting fresh records soon, and so that's where people are getting caught offside.
Mark, you've been talking about this possible squeeze higher in the U.S. dollar. We're, 0.4% higher this morning? Put a number on just kind of the short squeeze you're expecting. The dollar softened by nearly 9% since the highs this year. What kind of a short squeeze could we get?
Yeah, it's a great question, Valerie. I think it's kind of binary here. And what I mean by that is that, I think that we very easily do another, 0.5%, something small like that, kind of just unwind the last leg down, clean out those weak hands. I think that there is a tail risk here that this starts becoming self-fulfilling, that we build a new kind of narrative of, hey, the dollar move's gone too far too quickly. The macro community has front-run the real flows. So that, I think it's kind of binary. We either bounce 1% from the lows, or we bounce 4 or 5% from the lows. I don't think it's some middle picture. So it's wondering whether do we kind of get enough momentum that it becomes a self-fulfilling story and people kind of go, hey, the long-term diversification away from those real flows that are driving that are going to play out over 3 or 4 years. And the macro community has really tried to front run it because as we've talked about a lot in this show, the dollar bearish trend has multiple prongs to it. But I think you really need those real flows to kind of substantiate it. So, yeah, I know it's not a great answer to go 1% or 5%, but I think it's that fact that the trend line might break, you start building momentum, and you get just purely those momentum. CTA advisors have to stop out of the trade, and it starts becoming self-fulfilling and runs a few percent higher.
Bloomberg Markets Live executive editor Mark Cudmore there giving us his take on the events of this morning. Thank you so much. You get more up-to-date analysis from him and the team. ML if you go is the function on your terminal. I think it's interesting what he's saying there about oil prices and the relationship with the United States here, because clearly, you pointed this out, the dollar surging today. It's very out of character from what we've seen in the dollar in the last couple of days. But this is also a giant warning sign to Donald Trump, who's been enjoying lower oil prices. Yeah. People like that ahead of the driving season. There's an extra domestic political incentive to keep them there.
And then you fold in the tariff narrative.
Right.
And you think about kind of the inflationary factor that we need to fold into this. You and I were talking before we came on air about we've just had we had a CPI print and a PPI print this week that both pointed to sort of benign inflation. You put oil back in as a higher factor. You put tariffs at some point. You need to factor those in as well. What does the inflation print look like later this year?
Yeah, then you get all these catalysts for higher inflation instead of lower inflation ahead.
So certainly a lot to go through. We're a lot to factor in. We are about 5 minutes away from the opening trade. Futures pointing decidedly lower, down about 1.4% in the States. Stick with us. This is Bloomberg.
Until the opening trade this Friday morning. Crude is at the centre of the story, unsurprisingly. Crude's fascinating, though. What is happening with the oil price this morning is really worth paying attention to. You gap higher first thing this morning on the news of the attack. Then you go up to session highs, but you fade them fairly quickly. We're only up by 5.5% at the moment on Brent, which is fascinating considering the magnitude of the tail risks that exists right now. How far could we go? All kinds of really extreme scenarios being talked about at the moment, but we're not seeing it in the market this morning. We're only up by 5.5%. Yes, that's a big move, but relative to what we're seeing on the ground, maybe not. So let's talk about what impact that's then having into the equity story and see what we're seeing there. What you have seen, which again is interesting, is that US futures came down but haven't bounced, which is interesting. So you're getting a different response now in the equity market versus what we're seeing in terms of the crude market and the bond market, which is really interesting in terms of the picture we're seeing evolve. Val, what's happening with European futures? Where are we now? We're a couple of minutes away from the opening trade.
Hey, Guy, we are hovering near session lows for those Eurostoxx 50 futures, down 1.6%. We are seeing some outperformance in the FTSE 100. That's due to that oil price rises in those oil majors that trade. The DAX futures are lower as well, 1.6%, near session lows for European futures.
And that FTSE 100 underperformance, really crucial there, kind of only down by 0.5%. A lot of that might come to the energy majors that are, of course, going to be trading on the FTSE 100 higher, pushing against the gravity-defying move here. You're also going to keep one eye on the shippers. We've been talking quite a bit about the risk in the Red Sea and the ripple effects there. And also we have one eye on the airlines. Of course, there's the oil read-through there, but also, of course, the read-through and the updates that we're going to get from that Air India crash yesterday, Guy.
Absolutely. Higher oil price, also closing of airspace, two significant factors for the airlines. OK, here we go. Friday's opening trade. Let's talk about the numbers we're going to be watching. We are expecting a negative open. Don't have that yet from the FTSE 100, but I think it's probably going to be coming. Be interesting to see whether it can defy gravity. The oil majors probably, excuse me, are out early. in terms of the impact that they are having. They will probably open fairly quickly on the FTSE 100. The Stock 600 now down by 0.4%. I think it's going to take a while maybe for some of these other markets to get going. How does defence trade this morning? That's going to be interesting. The airline sector is going to be fascinating to watch as well. Higher oil prices, not good news for that sector. Plus, you've also obviously got to fold in the closure of airspace, which is something significant as well. It's a very narrow corridor through the Middle East that they can operate through now, and that's just getting smaller and smaller. The CAC, here we go, down by 1.2%. What are we going to see in terms of luxury? What are we going to see in terms of, again, you just think about the ripple effects that come off this conflict and what it could ultimately mean. The IBEX is down by 1.24%. It's definitely a risk-off kind of a morning, but it's a nuanced risk-off kind of a morning. It's not uniform in terms of the story that you're seeing evolving here. You've also got a currency factor to fold in as well. Kriti, what are you seeing on the sector story?
Well, as expected, right out of the gates, your biggest upside contributors are the ones that are exposed to oil. And I start with the upside contributors because from a sector basis, you are seeing red across the screen. The risk-off sentiment we've been warning about in futures certainly showing up across all sectors. Energy is very much the exception, though. So names like Shell, Total, BP, for example, I'm seeing early indications on some of the defense names as well. Rheinmetall, Saab, Kong as well. Plenty of them are moving higher. So the energy space is higher. Utilities just barely popping into the green there. And, of course, defense seems to be where the market is trading positively right now. But risk sentiment, Val, seems to be broadly negative.
Yeah, we are seeing outperformance in those oil major names, as you mentioned, Guy. BP shares up more than 3%. So really, that's the cause for the FTSE 100 outperformance this morning. FTSE 100 down only 0.4%. If you compare that to other markets, down by nearly twice that amount.
So the airlines are under pressure. You can see that quite clearly. IAG, owner of British Airways, Iberia, is down by nearly 7% this morning. EasyJet down by 5.44%. Remember, the low-cost carriers in Europe also fly down to this region as well. They are going to be impacted by this. The long-haul carriers, the east-west routes are going to be very much affected by the airspace closures, plus also higher oil prices, a big factor for these carriers as well. Carnival is down, TUI is down, Ryanair is down. So that is where we're seeing it being priced in. You're also seeing some of the chemical sectors coming under pressure as well. Key input into the chemical sector, obviously the feedstock, the gas price, what you're seeing in terms of the oil price, all of that coming through and impacting some of the chemical sector as well. So you're seeing some weakness in that space too. Accor is trading down as well. Obviously a big footprint in terms of the Middle East. What does it see in terms of maybe future bookings? Do people get more nervous about travelling to this region? Do they worry about that? So there's all kinds of things that maybe we need to fold in at the moment. But at the moment, it seems as if energy is up, defence is up. You've got travel, broad travel trading lower, plus a bit of chemicals action in there as well.
Absolutely. We should mention that as Guy was speaking, the DAX has also officially opened. No surprise, it is taking a beating this morning in line with the broader indexes across the world. The exception, as Guy mentioned, is the defense story. So you're basically one upside mover within the DAX at the moment is Rheinmetall. No surprise there. We'll see how that continues. That is quite literally, pun not intended, a defensive trade when it comes to this market. So that's going to be something we keep a very, very close eye on. But how do you move forward? How much is just in addition to the geopolitical risk, some Friday risk off and kind of taking a little bit of cash off the table as well? Mark Andersen, co-head of global asset allocation over at UBS Wealth Management, joins the program perhaps with some answers. Mark, a pleasure to have you on the program. Thank you for joining us. We're talking all about the impact of the oil hit this morning, but putting this in a broader context when it comes to just asset allocation, it feels like oil traditionally, or at least in the last 5 years, has largely been an inflation trade. So you don't include it in your portfolio unless you believe inflation is coming. Does this geopolitical risk change that narrative?
I certainly think that whenever we see oil prices moving higher, it has a bit of a negative impact, both obviously on inflation and on growth. In terms of an asset allocation, I think we've been looking for safer haven assets more in the direction of gold, where we're targeting 3,500. Towards the end of the year, that's something we've been having in our portfolios. On top of that, we actually think that duration is quite attractive at this place. So something like U.S. Treasuries, where we're targeting for the U.S. 10-year to hit around 4%, is something that we like as well. So as always, obviously with diversified portfolios, I think some of the key risks that are obviously hitting markets today, it's very clear that we'll see a negative impact on equity markets from this sort of escalation in the Middle East. We're seeing oil prices moving higher. But in many ways, this is something which is likely to be regionally contained. And with the two key questions on our mind really being, will it be a U.S. involvement and will there be sort of a targeted attack at U.S. or Iranian oil production? We think the answer to both of those questions are likely to be no, but with Iran producing almost 2 million barrels of oil per day, representing close to 2% of the world's oil production. That's obviously a bigger question mark that we'll have to deal with over the next couple of days here.
So, Mark, there's an argument here that a oil price rally is capped by any sort of concerns from trade deals that may or may not come to fruition. And that's really what's been driving the oil price lower and lower in the last couple of months. Walk us through that risk there from an equity perspective or even a bond market perspective. At what point do those both double down on risk sentiment or maybe potentially one day cancel each other out?
So I think one of the reasons that we've been seeing oil prices being a bit more capped, I think has been a bit more from a tariff and growth slowdown story. So I think what we're expecting to see now in the second half of the year is that the global economy is shifting to a lower gear in terms of growth activity, meaning that demand for oil, if we start with that part of the equation, is likely to be a bit more subdued. I think we've seen some confirmation over this last week or two where we've seen some of the survey data out of the U.S. indicating a slowdown to below trend growth in the U.S. I think on a number of different indicators, we're also seeing that the labor market is starting to weaken in the U.S. A lot of different things indicating that global demand is just going to come down with that sort of tariff story that we have going. So that's one of the main reasons that we think there is some cap on oil prices. But of course, there is a risk scenario here, and that's obviously what everybody will be starting to price now at the moment. And what we're seeing in oil prices today is exactly, will Israel be looking to target some of that oil production in Iran? And that's really what markets are thinking about. And then maybe just the last thing to add, there is obviously uncertainty on the timing of a potential Fed cut, and with a bit of an inflation spike potentially also coming from oil, is not helping that narrative for markets here.
Mark, let's just unpack some of this and talk about it in a more segmented way. Europe has been the trade. Buying into Europe has been something, obviously, or at least not putting money to work in the United States has been a trade of late. Europe is highly exposed to higher energy costs. Do I call into question the Europe trade if I see higher energy costs? Is that something that I need to rethink if we see higher energy costs being sticky?
I think you're absolutely right here, Guy. I think there's a number of headwinds after we've seen a phenomenal beginning of the year for European equity markets, in many ways been driven by the hope for sort of fiscal stimulus coming out of places like Germany. I think some of the headwinds, I mean, energy is obviously at the core of the story today, but there's a few other headwinds that I think that the market has been grappling a bit with. One thing is sort of what's the opposite side of the US dollar weakness has been Euro strength. And Europe is sort of a traditional export-oriented economy, is one that will be hurt not only from upcoming tariffs, but equally from a stronger Europe. Another thing is obviously that some of this fiscal impulse that we're likely to see is only likely to hit really markets in 2026 and 27. Valuation have gotten a bit closer to long-term averages when we look at something like price-to-earnings ratio. So we're seeing a little bit of a fizzling out, if you will, of that European equities trade, yes.
Europe has acted in some ways as a diversifier. So let's talk about what you do next if you're looking for diversification. The tail risks keep becoming centre of the distribution risks, Mark. There's a series of tail risks out there. What is happening with tariffs, what's happening with China, what's happening with the oil story, what's happening with Iran. They all seem to be coming to the fore at the moment, and investors are having to deal with an awful lot of them right now. How do I build? What does a portfolio that is long uncertainty look like right now? Do I just have to be in cash? You talked about the gold trade. Europe has been part of that diversification of trade as well. Is it getting harder to build a diversified, robust portfolio in this current environment?
I think you're right. We certainly need to think a little bit harder about it. And one of the questions you had in there, Guy, was essentially, should I just be holding cash? And I think at a time when central banks are lowering rates, meaning that you're getting less return on cash, at a time where inflation is likely to move higher, both from tariff, today from oil prices, that's unfortunately not really an alternative as nice and cozy as that might sound. Equity markets have actually done, I think, extraordinarily well, despite a lot of these tail risks. And I think it's still telling a story where we're expecting to see a global economy continue to grow relatively well over the next couple of years, central bank cutting rates, etc. So a number of these things are also longer term supported. Now, to create that stability in portfolios, we certainly need to think about what are the biggest of those risks and how can they be hitting that nicely diversified portfolio. And I think inflation and geopolitical risk are certainly the biggest ones that we're trying to tackle when we're building portfolios. On one hand side, gold is probably the best thing that we added to our portfolios middle of last year, just from the fact that it's both helping us when we're seeing rising tensions in places like the Middle East, like today, but at the same time also weighing against debt fears, inflation fears, etc. I actually think that there is a place for adding a little bit more bond duration at this point in time as well. I think what we've seen in bond markets is that when we're seeing that weaker economic data, that basically sends yields lower, a bit like on a day like today where there'll be some growth concerns as well. So those are elements that we're building in there. And then, of course, we have a lot of alternative assets that are not directly linked to things like equity markets.
All right, Mark, so you mentioned that you want to be adding duration here. But when you, I guess, frame the Middle East tensions here, you said there are two big questions. Will there be U.S. involvement, which you said no, and will there be a targeted attack on Iranian oil production? You also think that's unlikely. So does that present maybe this equity market dip that you want to buy into here?
Oh, that's a good question. We actually think that we have seen most of the rally of this year for some of the major equity markets. So we see more limited upside, if I'm very honest. So we go for individual markets where we see a bit more opportunity. Some of those areas, including AI, tech, Swiss equities, sorry for being a little bit home biased here sitting in Zurich this morning. I think on equities, when we saw the sharp sell-off after the so-called Liberation Day, early April, we did take that opportunity or the dip in markets to bring U.S. equities back to an attractive rating just after the sort of the more attractive value that had appeared. So if we were to see a more significant sell-off, I'd probably say yes to that question. I think sort of a smaller dip of the nature that futures indicating today, the U.S. down, say 1-2%. That's not significant enough to go in and sort of and be a buyer of that in our view.
Mark, great to catch up. Thanks for the time this morning and the analysis. Mark Andersen, co-head of Global Asset Allocation, joining us from UBS Wealth Management. Quick look at the core six around Europe this morning to see what is happening. The basic divergence is you've got defence stocks up, oil stocks up. Anything associated that uses energy is down, so aviation is down. You've got some of the chemical sector down as well. It's interesting to see Nestle down by 0.8% this morning. In theory, that should be a relative defensive space in this market. You're not getting that. You are getting a bit into Novo Nordisk, which is interesting as well at the other end of that. Tech's not getting beaten up that much, but luxury is under a little bit of pressure. There's obviously a link there with what happens with the travel sector. Let's get the latest now in terms of what else we should be watching within this market. Here's Joe.
So as you say, Guy, those themes around the moves in energy really driving the main market moves. And actually, the majority of the stocks lower at the moment, around 90% of the stock 600 in the red at the open of trading. But some significant areas of green, as you say, energy stocks, BP, Shell, Total Energies, Repsol, all gaining pretty significantly. The UK FTSE 100 getting a bit of a boost from those UK names at the top there, lifting that. And then defence, given the geopolitical tensions, potentially pushing up projections around defence spending. Will we see a faster approach to the NATO 3.5% target on their spending, or even coming up to 5%? How will this affect that, given these fresh tensions adding to what we've seen over the past few months? So Rheinmetall, BAE, Saab, Leonardo, all of those pretty strong gainers today. And then shipping as well, because these tensions potentially just mean that we get further delays on the resumption of travel through the Suez Canal by the big shipping companies like AP, Moller, Maersk. So that stock actually rising, because this would mean potentially higher shipping rates, higher for longer rates. The cost of moving goods by sea potentially coming up even further following these fresh tensions, these strikes between these two countries. So those stocks in the shipping space getting a boost as well. And then also precious metals miners gaining. Gold actually only up around 1% at the moment. Not actually a huge move in terms of the move in that, but remember, we are at near record highs for the gold price at the moment anyway, so potentially not too much upside. But the miners getting a boost. Endeavour, Fresnillo in London, and a couple of the South African companies as well getting a lift from the higher precious metals price, all due to the haven trade, of course, given these strikes. And then finally, just checking back in on airlines, as Guy mentioned, travel really the underperforming sector. It is largely due to that higher oil price and therefore potentially concerns around added fuel costs. And then we have got headlines coming out around airspace, around Iranian airspace, but probably it is more related to that jump up in oil prices and the subsequent knock-on for fuel. So travel really the big underperforming sector in the open of European trade this morning.
And following the move from yesterday as well, Joe Easton from our equities team, we thank you so much for that initial context on those early movers. 15 minutes into today's session, we're going to continue the conversation. Coming up, the International Atomic Energy Agency says there's no increase in radiation after Israel attacks Iran's nuclear program. We're going to speak to our atomic diplomacy reporter next on the program. Stick with us. This is Bloomberg. Welcome back to the opening trade. About 19 minutes and change into today's session. Red across the screen, although off of its lows. And I think that's the key takeaway here as we really comb our way through some of this volume this morning. We started off the day with almost 2% declines on the stock 600. That is now getting pared back to only down about 1%. The FTSE 100 clearly not taking as much of a hit as the rest of its indexes across the continent. The FTSE 100 only down about 0.6%. But defense not really helping the DAX as much as you think it would.
No. There's obviously a big chemical sector, there's a big industrial sector. Germany is highly exposed to the energy story. It is going to be a meaningful impact on its economy and its industry if we see energy prices moving sharply higher. So I think you just need to bear that in mind in terms of what you see with the German market this morning. Let's talk about some of the other responses we're beginning to get. I think a response from Turkey and also from China now. A leading member of Turkey's ruling party calling Israel's attack, quote, barbaric. You've got the Chinese also out making comments on what we've seen here, talking about the fact that they oppose the infringement of Iran's sovereignty, calling for obviously de-escalation in this process. Let's carry on the story and try and understand it from the various angles that we are watching this morning. Obviously, the nuclear angle is critical to this and try and get an understanding of what is going to happen next. Images on Iranian state television clearly showing thick black smoke rising from the area around Natanz, the sites, which is in central Iran, one of the kind of two obvious or declared nuclear plants that the country has. Bloomberg's atomic diplomacy reporter Jonathan Tyrone joining us now. Jonathan, just talk to me a little bit, talk to us a little bit about kind of what this means for the nuclear program and why the Israelis have felt that they need to strike now. How close to achieving a nuclear weapon was Iran?
Well, look, the intelligence assessment from the U.S. And the IAEA was that Iran's formal weapons program ended in 2003, and Iran has not commenced a formal structured weapons program for more than 2 decades. That being said, Iran was found in non-compliance of its nuclear safeguards obligations yesterday at the IAEA in Vienna. That's in relation to an investigation into the detection of uranium particles found at undeclared sites. These are years-old suspicions. However, Iran did not cooperate with the IAEA's investigation. That being said, we have to separate how close Iran is to a nuclear weapon from its non-compliance. The fact is that IAEA investigators remain in Iran right now. They conducted more than 400 inspections last year. That's 1.4 sites a day. And they're keeping track to the gram level of Iran's nuclear enriched uranium inventory. That's how we know that Iran has the equivalent of 10 bombs worth of highly enriched uranium. Now, what this strike does is complicate diplomacy and add mounds of risk, because Iran has already stated one of its reactions could be to leave the Nuclear Non-Proliferation Treaty if it was struck. And what that does, Jonathan, is add a new layer of opacity. It will remove inspections entirely.
Jonathan, just briefly, we knew that these U.S.-Iran talks were going to take place in Oman over the weekend. Do we know if they're still on track?
I haven't heard anything different. We're going to get our first detailed readout of what happened overnight in terms of the nuclear file by the IAEA Director General Rafael Mariano Grossi. The IAEA Board of Governors is still in session. It's convening at 9:30 local time, and they're going to discuss, what's happened. We'll obviously be hearing from Iran. We'll be hearing from the U.S., and this will be the first real detailed readout of the, nuclear diplomatic situation. So that's forthcoming.
Well, we look forward to seeing if those talks stay on just hours away from where they're supposed to happen. Bloomberg's Jonathan Tyrone, we thank you so much for that additional context when it comes to the nuclear story. We were talking there about what happens next when it comes to relationships with Iran, but a lot of the airlines already preparing to reroute flights and address some of the airspace closures over the Middle East to avoid the conflict. Let's bring in Bloomberg's Benedict Campbell. He joins us from Berlin, talking to us a little bit about, maybe not Berlin, but talking to us a little bit about where the aviation industry is viewing this conflict and how to move forward. Benny, walk us through the latest.
So we have heard that the Israel airspace is closed. That's obviously a fairly small airspace, but it's an important one because of a lot of planes that go from Europe through the Middle East into Asia use that portion of the world. Iran also closed. So this further narrows sort of the scope of airlines as they go from west to east and the other way. And this is something that has become sort of a feature of modern aviation in recent years. Obviously, Russia is closed to a lot of airlines. Ukraine has been closed to a lot of airlines. India, Pakistan, another conflict. So conflict zones are becoming an increasingly problematic part of aviation today. Obviously, no airline wants to be in a danger zone, wants to put its passengers and its crew in danger. We have had terrible incidents of planes getting shot down. So there's a lot of precaution right now, and this conflict just adds to that.
Benny, good morning. It's Guy. Can you just give us a quick update on what we have learned, what the latest is in terms of the Air India flight?
So the latest is that they have apparently retrieved one of the black boxes. We don't know which one, but if you see some of the footage, the tail of the plane was largely intact, even though the aircraft smashed into a residential area. And the black boxes, at least one of them, is located in the tail of the plane. So there was a fairly swift retrieval thereof. We don't yet know what the cause is. Some speculation around why the plane was not able to get lift. It seemed heavy. It seemed to sort of come back to the ground slowly and then explode. So a lot of focus will be on why was the landing gear still extracted? Why were the flaps not deployed to give the plane lift? So too much drag, too little lift, too much weight potentially, but really unclear at this point. A lot of questions. And that might also give a sense of why Kelly Ortberg, the Boeing CEO, has decided to cancel his appearance at the Paris Air Show, which kicks off this weekend. I know we were due to interview him, to speak to him, so he won't be there. He's really focused on the crisis response now. So he's staying behind, and that's where we're standing right now.
A totally understandable response from the Boeing team. Benedict, thank you very much indeed. Global aviation editorial leader Benedict Campbell joining us on the various stories impacting that sector. Up next, we're going to speak to an expert from Chatham House, their Middle East director on geopolitics. That conversation is next. This is Bloomberg.
This is the opening trade about 30 minutes into today's session, continuing to see red on the screen, but definitely off session lows. And again, only 30 minutes into today's sessions, we've seen some of those losses paired across the board. Stock 600 down just shy about 1%. Some heavy losses in the DAX, though. The FTSE 100 perhaps escaping those lows, only down about 0.6%, Guy.
Real divergence in the market this morning. You're seeing those that use energy suffering, the airline sector, the chemical sector under significant pressure this morning. Elsewhere, you are seeing anything associated on the upside with energy certainly benefiting. You can see what's happening with Brent crude, and you can see the effects of what has happened overnight in that market. That you could argue that it's a relatively small response in terms of what we're getting here. Let's talk a little bit about what we're seeing in terms of the latest. The situation is very fluid, but Israel's state Kan News is now reporting that the country is intercepting drones It's happening over Jordan, it's happening over Syria, in the airspace of both of those two countries. Jordan has temporarily closed its airspace, citing precautionary measures. Iran's sending a volley of drones that were intercepted, are being intercepted by Israel. The Israeli attacks on those drones obviously are going to be causing potential concern on the ground in Jordan, as a result of which we're seeing the sirens going off in that country. Let's talk a little bit about what we are seeing here in terms of the response from Iran and Israel. Israel is saying, Kriti, that they had no choice but to make this attack happen.
Absolutely. On the other hand, Iranian state media also reporting that the head of the Islamic Revolutionary Guard, as well as the armed forces chief of staff, were both killed in the Israeli strikes. Iran also saying 6 Iranian nuclear scientists have been killed in the attacks as well. Israeli Prime Minister Benjamin Netanyahu vowing to continue attacks for as many days as it takes.
Moments ago, Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
Let's get a little bit more on those geopolitical implications of this conflict. I'm pleased to say Sanam Vakil, director of the Middle East and North Africa program at Chatham House, joins us this morning. Sanam, thank you so much for your time. Walk us through just what you're thinking of this conflict. How does it differ from previous iterations of this tension?
Sure. Well, good morning, and thanks for having me. This is a serious moment in the Middle East, a serious moment for Iran and Israel. This attack that has been launched by the Israeli government is being described as, of course, preventative or preemptive in order to prevent Iran from obtaining a nuclear weapon. The attack was launched and was very precise in targeting Iran's senior command structure. There have been deaths among very important people, including also nuclear scientists, targeted attacks across Tehran, but also strikes against Iran's nuclear facilities and efforts to take out Iran's defensive and deterrence capabilities, meaning missile and drone facilities, as well as Iran's radar capabilities, perhaps to prevent a further Iranian response. Iran has already launched, I believe, over 100 drones and cruise missiles, supposedly. I mean, all of this information is still coming out against Israel, and the Israeli government is trying and working to take those down. This is a dangerous moment that requires immediate de-escalation, and we just don't know how things are going to play out.
Sanam, you mentioned this is a dangerous moment. How does the U.S. plan to all of this? Do you think this is potentially an embarrassment for the Trump administration that this has escalated to this point?
Well, I think I see it as the president that was in supporting and engaging in diplomatic negotiations with the Islamic Republic. He is being perceived to have supported or indirectly endorsed the attack, perhaps seeing this as a moment of opportunity to pressure the Iranians further. It is, of course, halting diplomacy. Iran has canceled the planned talks for Sunday in Oman, and it's unclear how the negotiations will resume. They certainly will resume at some point, but I'm deeply worried that I'm deeply worried that while we're in this moment of escalation, Iran might take measures to withdraw from the non-proliferation treaty and make further nuclear advances in order to protect the regime further. And this, of course, will showcase that Israel's military action will not achieve its goals.
Sanam, good morning. It's Guy. It is clear that the Iranians do not control their own airspace. It is likely probably that Israel does. That means that we have a sort of asymmetric situation in terms of deterrence between these two nations. If that is the case, what other outlets, what other options does Iran have in terms of responding to the attack that we have seen?
Well, Iran is certainly, by all means, the weaker party, and you're quite right to point out the imbalance. Israel has continued to demonstrate its military and intelligence superiority since October 7th, and as it has attacked Iran-backed groups across the region. This is the third such and most serious strike against Iran that we have seen, and the very precise targeting of apartment buildings where key figures were habitating is reflective of that. Iran, I think, is going to try to accomplish a few things here. It has to respond to prevent further waves of strikes coming. But secondly, I think that the Iranian strategy is to make sure that response is relatively targeted, but doesn't pull Iran and the region into a broader war. I think there are going to be moments here where the international community, and particularly the Gulf states, can and should play a role to bring down tensions. I don't believe right now Iran is going to attack oil infrastructure in the region or target Gulf infrastructure, which they have threatened to do in the past. I think that this is there's an escalation ladder here that we have to watch. The U.S. has also made it clear that American military facilities and, of course, American lives must be protected. So Iran is boxed in, but the attack is underway. I'm sure there will be further waves to that attack, but Iran's response will extend beyond, and I think that we will see Iran taking measures within its commitments to the Non-Proliferation Treaty. It will kick out what remaining inspectors are left from the IAEA in Iran. It will start to look at other areas to pressure the international community in order to bring down tensions.
Sanam, thank you very much indeed for updating us. Useful insight into what is happening here. Sanam Vakil, Director of the Middle East and North Africa Programme, joining us from Chatham House. Let's talk about the market reaction. Oil has surged on the news of the attacks. Christoph Ruhl, Senior Research Scholar at the Centre on Global Energy Policy at Columbia University and a Global Advisor for Crystal Energy, joins us now. Christoph, in some ways you could argue that the response we're seeing in the crude market is relatively muted. I think we've got crude up by 5-6% right now. Given the scale of the potential for outages, do you think that is a reasonable response by the crude market?
Good morning. First of all, the markets are always right now. So, yes, it's reasonable. I think it is relatively muted, you're right, and there's a good reason for it, which is that markets, number one, try to gauge what happens next. We have seen that movie once before, if it was just a one-off strike, and we have seen oil prices spiking and then falling pretty rapidly before. This time it may well be different. Israel has said it will be different. And then you will see a second round of reactions to the oil price increases. But secondly, oil prices, if you want, have been sort of prepared. There has been a long discussion now over the last 2-3 months with OPEC Plus increasing production much more than they had previously announced, and there was speculation about the reasons. And one of the reasons was actually that people suspected that something may happen, and they are in the business of creating a buffer for the possible price reaction.
Well, Christoph, let's stick with that line of thinking there. If OPEC Plus and members of OPEC Plus maybe saw this coming, maybe wanted to create that buffer, as you suggest, is that move over? Are they still in the business of looking to create a buffer moving forward?
Well, this is a really interesting point because, remember, OPEC Plus had cut production by 6.5 million barrels per day to keep prices up, came increasingly under pressure, and then had a schedule by which they wanted to increase production, and starting in April, increase production by much, much more for 3 months in a row. And people were wondering, why is that? And there were 3 possible reasons being discussed. And I think now we are learning it's not one of the 3. They're all coming together and they're all connected. And the 3 reasons have been, number one, the official one, which OPEC Plus said themselves, is that they had some members like Kazakhstan who produced way above quota and who argued they couldn't really scale it down for various reasons, so they needed to be, in quotation marks, punished. That was one reason. The second one was there was speculation, in particular around the time when Trump visited the Gulf countries, that maybe something was in the making, tighter sanctions on Russia, more sanctions on Iran, Venezuela, or something similar to what we are seeing right now. And that in order to prepare for that and in order to be in the good books with the new American administrations, they had increased production by so much more, or had at least announced that they would. And the third reason is a very long-term reason, which is that the oil market, when you ask most oil market analysts, is likely to see demand peaking and plateauing within the next few years, within the next 5 to 10 years probably, and that will change the market completely, because in a market which shrinks, the oil market has always been rising. In a market which shrinks, if you want to only maintain the same volume of oil you sell as before, then you need to increase your market share by definition, and you do that usually by price competition. And so the third argument was that they may have wanted to prepare themselves for this battle for market shares by being at full throttle production when it starts, and not, already having a lot of spare capacity. I think these are three reasons: one short-term, one medium-term, one long-term, which also have different importance. The last one, the market share one, the long-term one, is the most important one. The punishment of Kazakhstan and others is the shortest term one, and the least important one, and what we have now is in the middle. And I think this was one of the few occasions where probably all three guesses were right, and where when you put yourself into OPEC Plus shoes and you're not quite sure what's going to happen, this seems to have been a very good time to increase production ahead of schedule, and they proved to be right so far.
All right, Christoph Ruhle, Senior Research Scholar at the Center on Global Energy Policy. We thank you so much for joining the program this morning, providing a little bit of context where oil prices may go next. We thank you for that insight. Up next, we're going to speak to a key opposition voice from Israel, an interview with former Prime Minister Naftali Bennett coming up next. Stick with us. This is Bloomberg. Welcome back to the opening trade. About 46 minutes into today's session, seeing red across the screen. The stock 600 down about 0.7%, but pairing the losses we started at when it came to the open. Green on the screen, however, when it comes to the oil market. However, also pairing the jump that we saw earlier today, an almost 13% move earlier in the session, now only higher by 5%. A geopolitical risk premium braked into Brent of less than $2. 73 handle there, Guy.
Let's get some insight into what is happening in Israel right now. I want to take you to Tel Aviv. Israel's former Prime Minister Naftali Bennett joins us now. Good morning. Thank you for taking some time to speak with us. What do you make of the action that has been conducted by the Netanyahu government overnight? Are you broadly supportive?
Absolutely. This has been in the doing for many years. Iran was racing forward to acquire 10 nuclear warheads. They accumulated enough uranium for 10 nuclear warheads, and they weren't stopping. We gave endless warnings, and now it's time for action to take out Iran's nuclear program, to take out its military and terror leadership that's been fomenting so much terror, so much pain, and the world will be a much safer place when this action ends.
What do you expect this? You say this action ends. How long do you think it'll take before this action ends?
Well, that's to be seen. It may take a few days. This is not a one-off. This is a very comprehensive action because we need to really not only neutralize the nuclear program, but also neutralize the ballistic missile program, which I'll just remind you that over the past year, Iran twice attacked Israel with hundreds of ballistic missiles. So we're also focused on that. It'll take a bit, but this has been long in the doing, and we have to complete it.
This is Kriti in London. Thank you so much for joining us this morning. Talk to us a little bit about moving forward. You said this is not a conflict necessarily over. It could take weeks, potentially months as well. Naftali, talk to us about whether or not Israel can go at this alone.
We are going at it alone. We have never asked anyone to fight wars for us. We can defend ourselves by ourselves. But I will say that this is a vital strategic interest for all of the free world, because Iran has been the epicenter, the head of the octopus of terror, whose arms were all around the Middle East, in Lebanon, in Iraq, in Yemen with the Houthis, It's Iran who's been funding all of these terror organizations, who's been training them and operating them. So the big mistake for the past 30 years was fighting each tentacle, and now finally we're hitting the head of the octopus, which is very smart to do. Therefore, although I am in the opposition to our government, I am supportive. And most Israelis, I'd almost say all Israelis, left and right, are supportive of this strike.
Naftali, you make the point that you're going at this alone. Talk to us a little bit about how long you can sustain that strategy, how long Israel can sustain that strategy. You've been a former defense minister as well. When it comes to targeting the nuclear program, is this a reasonable long-term approach?
I think it's proven to be the only approach because all the other ways have failed. We tried the diplomatic route for years and years, and Iran had just made the progress. As I said, they've accumulated enough highly enriched uranium for 10 nuclear warheads. They've begun producing the bombs themselves as we got the latest information, and that intelligence was the intelligence that brought us to take this action. We're doing the job for the world because, if Israel were around during 20, 30 years ago when North Korea went nuclear, maybe that would not have happened. But right now, words will not stop Iran. That's very clear. Only action, and this is really the last resort. I'll also remind you that Iran has been trying to foment terror all across the world. They tried to kill President Trump. This is what Iran is about, and now we're stopping it.
Naftali, speaking of the U.S., U.S. President Donald Trump had urged a diplomatic solution between these tensions. Are you worried in any way that this could create a rift between Israel and the U.S. administration?
I think quite the contrary. I think President Trump has been very clear, as all presidents before him, that Iran should not acquire nuclear weapons. And I think when all is said and done, President Trump will appreciate Israel's courage and action and initiative in taking out this terrible, terrible regime in the nuclear program, which was risking everyone.
And then I want to ask about maybe more domestic politics in Israel. Some of Netanyahu's critics may have suggested that this warmongering conduct with Iran is motivated in least by political survival on his own part. Do you have any read on that?
How can this be called warmongering when it was Iran who shot twice in two different attacks, hundreds of rockets at Israel and missiles at Israel? We only responded. So this is not warmongering. As I said, I'm in opposition of Mr. Netanyahu, but on this, there's no left and right. We all support this action because it's going to save millions of lives and save the Middle East from a horrible nuclear nightmare.
Naftali Bennett, let's just talk a little bit more about what you've just been referencing. You say that Iran tried to kill President Trump. That is unproven, I think, at this point, unless you've seen intelligence that we haven't. We question whether or not there is going to be this support coming from Washington, D.C. At what point do you see the relationship between the Israelis and the Americans starting maybe not to be as favorable to Israel as it once was? You must have watched the recent trip that President Trump took to the Gulf states and have seen the very close relationship that exists between those Gulf states and the United States now. Are you certain? Are you absolutely certain that there is this support coming from Washington, D.C. that was once there? Are you certain that it will continue?
Of course, I can't know everything that'll happen in the future. What I can tell you is that the leaders that President Trump met, they will feel huge relief. The leaders of the moderate Arab countries in the Middle East, their huge threat was Iran. Iran was not threatening only Israel. Iran attacked the Saudis, Aramco, I'll remind you. It attacked the Emirates. It's been sort of an anti-Midas touch. Everything it touched in the Middle East went down. Lebanon, Iraq, Syria. And if we can remove this threat from the neck of the Middle East, everyone will be thankful. I don't know about tomorrow, but certainly years from now, yes. Just like we took out the nuclear program in 1981 of Iraq, we were condemned by the whole world, and later on, everyone thanked Israel for taking care of that.
What is clear at the moment is that Iran cannot control its airspace. Israel controls Iranian airspace at the moment and has the ability to strike with some degree of impunity. It is clear that Israel controls its own airspace, so there is an asymmetry in terms of the response that we can see delivered in terms of the air attacks that that Iran can launch against Israel. What kind of a response do you think Israel should now be expecting, therefore? If Iran has to choose other routes, do you think that will be something that we need to watch out for next? Do you think that's something that the Gulf states will need to watch out for next? We're trying to see what happens with the Straits of Hormuz. We're trying to understand how secure the rest of the Gulf is, how the rest of the world is. Is there not a danger, though, that you have, by the Israeli action has brought the rest of the world into this conflict because of the uncertainty that exists in terms of the response that Iran may deliver, because of the asymmetry that exists between these two nations in terms of their ability to strike each other?
Well, anyone who's been around for the past couple of years, there has been a huge regional war going on over the past couple of years, started by Iran, by Iran's funding. So we are not starting anything. If anything, we're trying to put an end to this terrible regional war that Iran initiated through Hezbollah, through Hamas, etc. And we have to be prepared for all sorts of responses from Iran. You're right about that. But the region, when the dust settles, the region will be much safer, and millions of lives will have been saved by removing the nuclear threat from everyone's head.
Naftali Bennett, former Prime Minister of Israel. Sir, thank you very much indeed. The former UK Ambassador to Iran, Richard Dalton, will be joining The Pulse, 9:30 a.m. London time, a conversation with Francine Lacqua. That wraps up the show. The Pulse is next. This is Bloomberg.